Hi, Bill Hayes with Kenilworth Asset Management, and today I'm going to talk once again about income. I think this is my income part 4. Well, what we're going to talk about is how you can get income in what is going to be an interest rate environment that's going to remain low for some time. Fed actions last week in essence have said that we're going to look to keep our interest rates down for the foreseeable future, which is roughly up to 2014. So now you have to say to yourself, where can I go to get income? Well, before we talk about income, let's talk about the overall perspective on where the Fed is and with the presidential election and what that could possibly mean to interest rates. Right now you've got two camps, obviously. You've got Obama and you've got Romney. If Obama wins, well, Bernanke's fine. If Romney wins, well, Romney's already talked about getting rid of Bernanke. However, that's not like he gets in on January 2nd and next thing you know, Bernanke's out. It takes a little bit of time. So for the foreseeable future, let's just say for argument's sake, mid of 2013, interest rates aren't going to go very far. And now you're starting to see housing starting to bubble up again. And this is the 5th consecutive month of housing starts rising, which is a very good thing, because if housing can start going up again, that really does start adding some meat to the economic machine that can drive this market. So let's talk about income for the near term, over the next 6 months, let's say. You've got money market rates that are an abysmal 0.1% if you can find it. And you've got the T-bonds, the 10-year notes, they're yielding 1.8%. Now with inflation at 2%, in essence, if you buy a 10-year note, technically you're losing money to inflation every year. You're losing roughly 20 basis points. So how do you try to make that up? Well, there's a couple of ways to do it. Now, if your heart's set on staying short term and you want to get the most, you don't want to get the 0.05 or 0.1%, what you can look for is using iShares, which are ETFs, exchange traded funds. And they're kind of like a mutual fund without all the fees. And we've talked about them in the past. The best one for the short term right now that I feel, this is strictly my opinion, and obviously consult with an advisor before you do any kind of purchase, but Barclays iShare, which has a symbol SHY, Sam Harry York, and they're a 1 to 3 year treasury bond exchange traded fund or ETF that yields currently 0.48%. So for a money market alternative, albeit it's not a money market, but a money market alternative, it's not a bad, you're boosting up your yield. You can also, if you want to increase, obviously you increase risk, you increase your yield, but another one to look at is the corporate short-term, the LQDs, we've talked about them, 3.49% right now, which is not bad. Then you can even increase, if you want to increase volatility a little bit more, you can look at REITs, real estate investment trusts, and they can go anywhere from 4 to 7%. Then you have master limited partnerships, which we've talked about them too. They have a wonderful yield of 6.8% with a tax treatment that allows you, actually it's treated not as income, but it's treated as capital gains when you sell. And we've talked about them in the past and always consult an advisor, but that's a tax deferred yield, which is kind of nice. You do get a K1, so talk to your accountant. But it is a good way to get current income and keep your taxes low. And then finally, you can always look at high grade stocks. There are a lot of stocks out there that have some significant yields to them, and if it's good for your portfolio, they're going to yield anywhere from 4 to 8%. I mean, there are names out there you can think about, which is Pfizer and AT&T, Verizon, British Petroleum. All those companies have very good yields. Now, obviously, they have to suit your portfolio, and it has to be something that's in balance with your portfolio so that you can actually take a look and look at for overall. But they're great alternatives for income. And if you have any questions and you'd like to learn more about that, you can always feel free to call me, Bill Hayes, at Kenilworth Asset Management, 847-920-0400. Thanks, and have a great day.